these broader markets. If you're around, join in and have a little conversation. But what a surprise after the reversal day that we had yesterday, which was so powerful. Um, big range expansion, green bar. We had the few days here, the day before yesterday that took out the lows and then the reversal. Historically, just a really good reversal signal for prices to move higher. Of course, it's in a downtrend, as we all know. Prices making lower highs and lower lows. But one of the reasons we were looking for this to begin to turn around was because it took out this prior low down here. And historically, once prices have retraced more than 100% and they take out the prior low, they begin to stabilize. So the momentum begins to slow down and you get a turn. So looking at that from a higher time frame, taking out the prior low, it begins to shift our bias to prices beginning to turn. And as I covered in prior videos, our internal market gauges had reached such an extreme that it supported the bias that prices could turn around. Now, today doesn't mean that they're not going to turn around, because bottoming patterns just tend to be what I like to recall as treacherous. There's a lot of uncertainty, and the news that came out that confirmed recession, which we all knew, well, no or not, it was here. There was enough evidence to believe that. But, the whole idea, soft landing, so on and so forth, that's been talked about. Anyway, so the realization that things are as bad as we all know that they are, beyond what the political jargon is, came out, and then prices gapped down, and they gapped down about 50% of this big green bar. Clearly bearish. Could it have survived from that? Sure, but it didn't. And when it attempted to bounce, it failed. And now it's taken out this low, and we got this little bottoming tail bar that occurred today. So again, we're going to see if this continues to try and bottom out. The more days that prices have hang down here, and then eventually get through the high of this green bar, the greater the probability that this is going to hold and we'll get some kind of a counter trend bounce, maybe up to this level of this prior pivot high. That's what the PH is, pivot high, which marks three lower highs to the left and three, or at least three to the left and three to the right, which creates a little area of resistance reference point for us. So again, we'll see if this bottoms out here. So prices potentially to follow through tomorrow. So we would say, well, follow through to where? We're looking at SPX here. So 3,600 is a whole number. Typically, those whole numbers have a tendency to hold. Now, down below that, we look at this 3,680. I've got two lines here. First of all, 3,600 is an obvious place. 3,580, which you can see here in our options table, just look, what we look for here is whole numbers as well as open interest. So let's find 3,580. And here, 3,580. And this is the key here. See the open interest? 40, previous was 36,000. So some of it came off today. These are put options. So 35,900. Not many came off. So that big open interest at 3,580 is a big reference point. So somewhere between 3,600 and 3,580 is going to be a big support area for several reasons. What I'm showing you here is now 17,000. It's not as big as, if we usually you would have an open interest with the biggest number, but 3,580 is the biggest number. So going through 3,600 probably gets a little bit more sell orders hitting, and then this 3,580 is a big level. And now, look, prices moving down as far as they have from the August high all the way down here, taking out the low, coming down here, probably a capitulation kind of a move first thing in the morning, and then we get the reversal, and of course then we'll see how far it gets. So that's my bias for tomorrow. Now, obviously, a lot of damage done across many sectors, and one of them that is Apple, that is in so many different indices. And so we see this big nasty reversal bar that's now on the weekly. That reversal from yesterday prices gapped down almost to the low of it and extended the move down, almost got to 140. That seemed like an obvious place. But as we got to the end of the day, the markets began to stabilize and we got a bounce, which some of us played in the green room today in individual stocks, but I pointed out what was happening. I'll show you the intraday chart and why. So this certainly looks like it's going to go down. And as we look at other stocks, looking at, the FANGs, Microsoft, you see it actually held here. So compared to Apple, it held these lows and another bottoming tail bar. So this is one, the market turning around. This one should be able to bounce greater since it's showing relative strength. Semiconductors have been under pressure and that broke under the lows, but still could be part of a bottoming process. We'll see. As we go back and look at these charts later on, well, obviously we're going to see if they keep going down or whether this was actually a low day or part of a low day or a turning point based on prices having moved as far as they are. We can see momentum is slowing down on the weekly time frame. The weekly range here in NVIDIA is narrowed considerably from what it was. So we'll see how that continues. Meta, old subtle relative strength. Nonetheless, it held up better certainly than Apple did. And Tesla, that didn't hold up well at all. It just seems smashing down here, and it's got a void below, but at this pivot. So it would be a terrible place to consider shorting it at that area of support. And looking at financials, we got JP Morgan just trying to hold these lows here at this prior pivot. Well, we always say look to the left, that bottom support there. Goldman Sachs right here coming down to support. And even consumer staples, food, Kellogg's got sold today. And General Mills, right, which is still in an uptrend, but got sold today. Take a look at Bitcoin. Held up relatively well. It got rejected big time a few days ago, and it's just holding on what I call the cliff here on the weekly time frame since it's got so much room to fall if it violates this low. So I'm flipping over to the monthly chart to see there's really no support underneath here if it violates these levels. So that's certainly something we'll be keeping an eye on. And I said I would show you intraday what we were looking at here. So here is a screen that I have my intraday internals, meaning the AD line. And so you can see yesterday was up here around 2,300 plus, which was great for an up day. And now followed by a complete reversal today, all the way down and down here at 25, minus 25 plus. And so as time goes on, what I'm looking for here on a 5-minute chart is to see this begin to stabilize before I can start considering maybe counter trend trades. And obviously I want to see it get above the 20 MA. So here it starts to move up. And the VIX, if this is going up and AD line is going down and ticks are primarily negative and going down to minus 1,000, longs aren't going to work other than very small scalping situations. Now, at the end of the day, we had this retest pattern. And so the thinking at that point is, well, everything's still negative, right? AD line, it's starting to get a little bit better compared to being terrible. And the VIX is starting to roll over. And now I've got this retest pattern. And while the ticks are still negative, they're better than they were back here on the way down. And so the thinking is all of this negativity, short selling, can reverse itself and drive prices higher into the close. And that's the thinking. And that point, every trade is about, I think this is going to happen based on whatever the criteria is that you're using and where's your stop going to be. So clearly when this reversal formed, breaking down below these lows, you got to be out. So you need to share size accordingly for that. What does that mean? That means, well, what are you willing to risk? What is the distance between your entry point and a stop? What is the value of that? And so if you're trading well, you can't trade SPX, but if you were trading spiders or possibly S&P contract, you'd have to share size accordingly based on whatever you're willing to risk. So say you're willing to risk $500 or $300. Well, you now share size accordingly so that when your stop gets hit, well, that's what your loss is, not that you're just open-ended to some arbitrary amount, right, which the market could care less about. Right? You say, I'm willing to risk $500. And based on whatever you're trading and the range that is trading and the time frame you're trading, right? If you're trading the large contract E-mini, it could be trading under a buyer bar's low or intra bar, and you could lose your $500, and it means absolutely zero based on the chart pattern. So we look at chart patterns. You or may not look at market internals. I do for intraday as well as end of day. And so as an intraday trader, I'm looking at this part of the screen here to make a decision as to what my bias is, and then looking at patterns. So one of the patterns based on that distribution pattern, and lo and behold, had a nice little drop. So we'll be looking for this to play out tomorrow. We'll see how it does. And hey, DC, someone joining here with me in the chat here. I do this kind of spur in the moment just to record this and then share it with others. Helps. And we'll talk tomorrow. Bye-bye.